What do you make of that retailer's results, and what would you be doing with the stock at this stage?
Good afternoon, and thank you, Bronwyn. I think Truworths' results, when you look at the bottom line, they came out with earnings of 15%. That's though compared to a 53-week period in the previous year. So on a like-for-like basis, I think the 19% looks pretty credible. But I think we'd want to look deeper into those numbers and the quality of those earnings. At the sales level, I think sales were up 11%, a sequential slowdown from the first half. But within that sales growth also, they grew space quite a bit in the double digits, and inflation also was at 10%. So real like-for-like volumes would have been down for Truworths. We'd also be focusing on the debtors line and the provisions for debtors. So yeah, looking more into the quality of earnings and how sustainable that is going forward, and whether they can keep this kind of momentum in the current environment. When
you allude to the quality of earnings, and you mentioned the increased space and the inflation element, if you take those two elements into consideration, there was pretty much muted growth at the top line. Is that correct?
Yes, that's correct. And I think that's a function of the environment as well. We're seeing a lot of companies in that sort of space having grown on the top line through space, and we think that's going to slow considerably now. And the key for most companies is going to be having to concentrate on keeping their costs down to manage the lower growth in the top line as well.
What do you favor in the retail space at the moment, Mohamed?
I think we still like the defensive retailers, so the food retailers, Pick n Pay, Spar, the ones that are more defensive and generally trading at a more secure and higher dividend yield.
Let's move on to Dimension Data, out with a third quarter management update today, and pretty much in line with what they've seen in the interim period. Certainly their gross margins remaining constant. Is Dimension Data a stock that you would be holding in a portfolio right now?
I think the share price has run up quite a bit, so currently at these prices I don't think I would be holding them. The report out today was pretty comforting in that it justifies what Dimension Data has been saying their strategy should be, and that's focusing on the services side. Services side held up quite well throughout the regions, and where they suffered the declines were mostly on the product sales, particularly in the US. So looking at what management's been saying over the years, their strategies coming through, the higher service levels are resulting in higher blended gross margins. But we know what the environment is like, and the top line is slowing, and they are a victim of the current environment as well.
And as you say, the share price has run pretty hard to date. I think yesterday we saw a 6% rally in Dimension Data's share price. So if you were to get in, you would look for a pullback first.
Yes, definitely.
Grindrod, Exxaro out with results tomorrow. Let's get a quick update on what you're expecting, or a preview of what you're expecting, kicking off with Exxaro.
Yeah, I think with most of the resources stocks that are reporting now, we have to look at the currency impact on those numbers and what the average rand exchange rate was over the period. They are reporting for different periods, so the effect of the rand would be different for the different companies. If we take Grindrod first, Grindrod did issue a trading update early July, I think it was, indicating that earnings would be down 50 to 60%, and I expect the dividend to be down in a similar level. It's effectively a function of lower demand and high capacity, high supply that's out there. So we think that the current environment will probably continue for them, and it will remain tough. But the share price also has been down a lot, probably down 50% from its high, and a company like that does have a good underpin from its infrastructure assets. So I don't see much more downside from these kind of levels for Grindrod.
And Exxaro, if you could just get your comments on Exxaro.
Exxaro will probably have a good set of numbers in the current environment. We expect earnings to be up probably in the low double digits. That's on the back of strong performance from its coal exports, as well from its Sishen iron ore project. On the dividend level, though, I think they might disappoint and retain some of their cash. They've got a bit of capex coming up, and expansions that are due at the Grootegeluk project, and we think they'd want to preserve some capital for that expansion.